For Frequently Asked Questions Friday this week, we are discussing transferring life insurance policies into a trust. And more specifically, we're talking about irrevocable trusts. So at a recent workshop, we had a number of questions about whether you could transfer ownership of a life insurance policy into a trust, and then also a discussion about naming the trust as the beneficiary of a life insurance policy. Life insurance policies are probably the second most frequently transferred asset into irrevocable trusts in my experience. The reason is that transferring ownership of a life insurance policy is very unlikely to change your life. When you transfer assets such as a bank account or investment account that you may need to use, say, to put a new roof on your house or something of that nature, it has more of an impact on your life. You need to do more thinking about whether or not you want to put that type of asset into an irrevocable trust. Most people are not using life insurance as something that they're trying to borrow against or trying to invade the principle of. So it makes a lot of sense to transfer them into irrevocable trusts. The reason why we would transfer ownership of a life insurance policy into an irrevocable trust is the cash value of whole life insurance policies is considered an available asset when we're going through the Medicaid application process. So in other words, we want to ensure that the life insurance policy doesn't need to be liquidated because a spouse or yourself need to apply for Medicaid, and then need to liquidate that policy, and thus also your beneficiaries would lose the death benefit. We also frequently name trusts as beneficiaries on life insurance policies, and the purpose of doing that is a little bit different. So in that case, we want to protect the death benefit from being paid out to a spouse who may be in the nursing home. So when we do estate planning with life insurance policies and irrevocable trusts, we often change both ownership and the beneficiary designation on them to protect the client and the cash value for them, and also to protect the death benefit later on. If you've got a question, we would love to hear from you. Just leave us a message on Facebook and we'll answer your question. Thanks.